die code. Normally, if you don't have any physical presence here in the United States, if you're not actually selling product into the United States, if you are an international based startup founder and you do, let's see, online consulting or online virtual assistance programs or online, what online whatever, as long as you're doing that in your country and the actual service is being performed overseas, there's no obligation to pay taxes here in the United States. I mean, our standpoint here at Doola, along with all of our other CPAs that we work with here at Doola, is that we don't believe that's taxable. What you do end up having to file, and what a lot of people's Doola subscriptions tends to get used primarily for, is you have to file Form 5472 with the IRS. In the past 2 years, the IRS has made the penalty for non-filing that form from $10,000 to $25,000. So that's the main form we would file for a foreign-owned single-member LLC. So normally, since you don't pay taxes, you just have to file this informational form. Okay, so what's on this informational form? The Form 5472 is just a related party breakdown. That's all it is. So let's say, if you're a foreign owner and you take money out of your US bank account, or if you're a foreign owner and you send in money to your US bank account, well, those are related party transactions because the US company is doing business with one of its owners. But that extends to even beyond just you as the owner, right? If you have family members, overseas and they're doing business with your US company, then, those are also transactions that we need to disclose with the IRS. A lot of cases, I'd say the most common cases we see is, someone has a company in their home country and they ship inventory over to their US company. Well, that absolutely is one of those transactions that ends up getting disclosed to the IRS, even if it's not necessarily taxable. So to summarize that question, if I'm a foreign-owned single-member LLC, in general, as long as you're not physically doing services or physically selling product here in the United States, no, there's not normally any tax obligations. But you do have a filing obligation regardless every single year, unless you've actually done zero in transactions. Okay. So, okay, so we can kind of move on to the next question, and thanks Parsha for answering some of them in chat that I haven't gotten to. So what happens if I start an LLC and decide to pay taxes as a corporation? So a lot of people tend to not realize, right, that, after you choose to become an LLC, you can always end up, electing to be taxed as a C Corp. A lot of people are confused as to why you would want to do that, right? Since usually a foreign-owned single-member LLC doesn't have to pay taxes, while a C Corp has to pay 21% in taxes every single year. Well, it depends entirely on, a situation by situation basis on if it's beneficial for your business. If you are an LLC, right, and you want to pay yourself as an owner, you can't deduct your salary as an expense for your bottom line, right? So let's say, you're just paying yourself $50,000. Well, that's not a deductible expense for an LLC. Because you're the single owner of it. You just withdraw money when you want to. It counts as an owner's distribution. It's not necessarily something that can be deductible. The difference between that and a C Corp, and here's where the main benefit of having a C Corp kind of comes in, is if you are paying yourself, let's say you're paying yourself a salary of, who knows, $400,000 a year as CEO of a C Corp, even if you own 100% of that C Corp, that whole $400,000 you're paying yourself is completely deductible on the bottom line of the C Corp, and it ultimately feeds into reducing your taxable income. It's a case by case basis on if converting to a C Corp is actually beneficial or not. I would say you'd probably be dealing in much higher amounts of income for a C Corp election to really make sense if you're an LLC. But that is something easily any LLC owner can do simply by filing what is called Form 8832 which is what we offer here at Doola for, a small add-on fee. If you ever are interested in converting over to a C corp for taxation, you'd still be an LLC legally, but you would be taxed as a C corp, which has benefits and obviously downsides. So, let's see. Sorry, y'all. I'm losing my voice today. I think I'm a little bit sick, so I have to keep taking sips of the Diet Coke on the webinar. Okay. This question here, I think that is a really great question. Very specific question. So I hope whoever asked this is actually tuned into the webinar today, tuned in with the webinar today, because this is a great question. It might be a bad answer for you, but it is certainly a great question for learning for all the other founders. Um, so here's the question. I am from Bangladesh, and Bangladesh and the United States have a U.S. tax treaty. I earned royalties from Amazon that, according to the Bangladeshi tax treaty, it's 10% withholding tax. Is there any way to pay 0% tax to Amazon? Amazon considers considers my single member LLC as an individual, so in my U.S. address it should have zero impact. They're calculating the tax based on my nationality, that is Bangladeshi, and for that, they're automatically cutting 10% withholding tax based on the tax treaty. So the core of the question here is, if you are receiving royalties from Amazon, and they're paying it directly to your U.S. business, why would Amazon be withholding 10% based on the Bangladeshi tax treaty if they're technically doing business with your US company? The answer is, and it's unique to single member LLCs, but what the IRS is really concerned about with the taxability of, money being paid to a company is who is the real beneficiary, meaning who is the person actually benefiting from this income. If you are a foreign-owned single-member LLC, especially to a company like Amazon, who has a really good compliance network, they have really great CPAs, so they know the rules. They'd be able to tell from doing business and looking up your business when they initiate doing business with you that you are a foreign-owned single-member LLC. Well, we all know that a single-member LLC, the profits from that business flow directly to the owner. To Amazon, yeah, they are technically doing business with a legal US entity, but it's clear as day who is actually benefiting from the US entity. Well, it's the foreign owner, it's the Bangladeshi citizen that lives in Bangladesh. So the rationale is, according to the tax treaty with Bangladesh, they need to withhold 10% because royalties are taxable. The normal amount of royalties that are taxable is 30%, and your tax treaty with America brings it down to 10%. So the reason why is because royalties are a little different from the classification of being engaged in U.S. trade or business, right? If Amazon is paying you and it's considered technically royalties, that's considered fixed, determinable, annual, or periodic income. It's called FDAP income. And FDAP income to a foreign owner is always 30% withholding rate. So Amazon has to rely on the tax treaty. Amazon has to use the 10% withholding per the tax treaty because otherwise they need to withhold 30%. And so unfortunately, yeah, you won't have unfortunately you won't have 0% withholdings with Amazon because you're a foreign-owned single member LLC. It's clear as day to any compliance department or CPA who the person really receiving the income is. You have a US business and it's a US business for all legal purposes and all normal business purposes. But when it comes to taxation, it's called a disregarded entity, a foreign disregarded entity, because the IRS sees it as you. There's no way of getting around that tax. The IRS knows, and companies with good, compliance departments also know this U.S. company. Yes, it's a U.S. company, but really, it's actually a foreign individual that is operating out of the U.S. Um, Dan, yeah, it kind of depends. I would say, in general, the in general, the UK has a pretty good tax treaty with the United States. I mean, from my understanding, it's probably even going to be lower than 10%. I think the last time I checked, it was maybe 5% for royalties. But the only reason why in this case that they're liable to be withheld by Amazon is because Amazon is paying them royalties. Like if you were just making money off of Amazon and it wasn't necessarily classified as royalties, well, then it's not FDAP income necessarily, and it might not be taxable here in the United States. But because royalties are based on a fixed agreement, they aren't necessarily considered tax-free, and they have a normal withholding of 30%. But just to answer Dan's question, since it relates to what I'm talking about right now, um, yeah, the UK probably has a similar tax treaty. And if you reach out and if you have something here with doola, as part of your tax filing, obviously you can reach out and talk to me or any other CPA, and we'll look into the tax treaty for you to get an answer. Okay, so let's see. I know that we have Parshva. I think maybe this question would be best for you. I don't know if you're here right now. We can, because I think this is one of the main asked questions from the webinar as well.
Yeah,
Uh,
I'm here.
so this
Which question are you
question
mentioning?
is, yeah, this question is, the company is located in Ukraine and they registered in Delaware. And so how can they get an EIN and how do they open a bank account, right? So it's
Right.
pretty, I think it's pretty straightforward about our operations here.
Sure. So, see, there is no restriction on registering a company from Ukraine. So, step one would be registering your company by filing your information with the state. Step two would be applying for an EIN. There is no restriction just because you are from Ukraine or a resident of Ukraine. So, you can definitely, we can definitely apply for an EIN. Once you get an EIN, you have to apply for an online US bank account that accepts Ukraine if you're a resident of Ukraine. So, there are certain banks that don't, there are certain banks that do. Okay, so for example, Mercury is a bank, Doola Banking is a bank. These are the banks that accept residents of Ukraine as well. So you can apply for a US bank account using your residency proof of Ukraine. And once you fill out the application, the bank will just check all the details, verify your details, and they'll be able to open a bank account. So there is no real restriction here.
Cool.
So
Okay, so
it's just like sorry Jim, it's just like any other country for Ukraine. So there is no worries. We can completely support residents and founders.
and Doola as well, that this is something we offer through Doola Banking and something we offer as part of um, our process. Let's see. So since Alejandro just had a direct question to me, so and this kind of ties into some of the stuff I've been talking about already in the webinar. So Jim, something that I haven't seen a clear answer on: when your income is not U.S. sourced, does it get taxed as FDAP or does it not get taxed at all? Yeah, right. Like this is you haven't seen a clear answer on it because it's not a clear thing in our tax code, right? So essentially, if your income is not U.S. sourced, it's foreign sourced income. Well, really, it comes down to the question of there are two different types of income. It could reasonably be. Is it FDAP income, right, which is generally taxable right here in the United States if it's U.S. sourced, or is it engaged in U.S. trade or business? If the income is not U.S. sourced, I would say it doesn't fall into either of those two categories, right? And I'd have to know more details about this exact type of income that you're referring to. But if you know for sure it is not U.S. sourced income and it is generated outside of this country in relation to another country, I would say that it's not taxable here in the United States. Almost certainly not. So, but I'll need more details to give a final answer on, really what kind of income we're dealing with. But just using the facts of your question, if it's not U.S. sourced, it's most likely not going to be considered FDAP. It's not going to be considered engaged in U.S. trade or business, and it's going to be just kind of considered income reportable in that country. Let's see. So I think my last question I think that I did want to hit is, just the same thing that a lot of founders have been asking week after week. If we have zero revenue, do we still need to file for taxes if we're a non-resident? It depends on the type of entity you are. And just to kind of specify how important it is to file, even if you don't think it's important to file. In this example, let's say there's an example of a foreign-owned single-member LLC. They have spent a lot of money on, running their business, so they have a net loss. The owners have been kind of contributing money to the business, right? But ultimately, they haven't had any real revenue or any real expenses. They've just been kind of paying for things on behalf of their business through their own personal accounts and sending money over to the US as needed to fund their business bank account. So in that situation, right, even though there's not necessarily any revenue or income, what they've been doing is still a reportable transaction. Like what they've been doing, meaning paying on behalf of their US business, submitting money to their US bank account, those are reportable transactions. Those need to be filed with the IRS under Form 5472. And the liability on them on not filing the form is a fine of $25,000, even if they don't have, any tax liability, right? So that's from the perspective of an LLC. Well, what about if it's a C Corp with a foreign owner and they do absolutely nothing? And I mean nothing. Let's say that it's a C Corp. They have, no activity whatsoever, no income, no revenue. They don't even have like owners' contributions. They didn't even open up a bank account. Well, a C Corp is different. A C Corp has to file every single year, even if every single answer on your tax return is 00000. It's going to be the exact same. So for a C Corp, regardless of your year, you're going to have to file that Form 1120. The situation where you wouldn't have to file whatsoever is if you are a foreign-owned LLC and if you had absolutely no transactions, meaning you didn't even submit things over to open up a US bank account, you didn't even have owners withdrawals, you didn't pay anything on behalf of the LLC. In that situation only, or you don't have to file anything. If you don't have any reportable transactions, you don't have to file anything with the IRS to be compliant. So that's the only thing that I would say is absolutely a situation where you wouldn't have to file at all. So let's see. I can go through, I think we have about 7 minutes left. JP, is there anything that we need to plug in terms of the meetings, or if you want me to hop into any more questions? Yeah, okay. So I can also kind of briefly go through expenses, kind of quickly. So all the types of what I've been kind of mentioning to a lot of founders that have been asking about it is, there are more expenses in the United States for your business that are deductible than are not deductible. People tend to be really scared about what they can deduct for their business versus what they can't deduct for their business. Well, really, there are only two things that make it so is something deductible or not. I mean, there are special situations for certain types of expenses, but for the most part, there are only two rules to determine if something is deductible for business expenses here in the United States. And I get that it is very different from most countries where they tend to not allow as many deductions. So it basically has to be an ordinary and necessary expense. And this is exactly how the IRS says it. And we've over the course of many years of court cases, have had to kind of define what ordinary and necessary expense means in the name of a business. Necessary means it's kind of the easiest part of it. Did you kind of need this to run your business or operate your business? If you're buying lunch with a potential coworker or a potential hire, or you're buying lunch with a potential client, obviously that's in the course of business. That's a necessary expense. It is part of normal business practice to try to pay for expenses for other people, that especially if it's part of your business and you're trying to entice them to become clients or what have you. Those are usually 50% deductible, meal expenses. Also buying a printer for your office, obviously that's a necessary expense. Buying office space, of course, necessary expense. These things are very common sense. The necessary part of it is common sense. The ordinary part is kind of the thing that requires a little bit more judgment on. And this is what you can kind of have a CPA for, to help you determine if something is really deductible expense or not. Ordinary means if you were to go to a bunch of other businesses that do something similar to you or are in the same industry as you, and we asked all of those businesses, hey, we plan on expensing this. Is this something that you expense? Would practically all of those other similar businesses also say it's a fair business expense? So that's why, if you're a software company, right? Actually, no, I'm going to try to think of a more unique scenario. I have a bunch of personal, individual, independent clients. They're actors. They act. They make all their money off of acting, and they've set up an LLC for themselves as actors, and they act in like these Netflix shows or whatever. So in that case, their expenses, they write off Amazon subscriptions, they write off Netflix subscriptions, and they write off movies that they purchase. And the rationale is, it's an ordinary expense. They're doing research and practice as part of their business and art. They have to see other actors, and they have to see, what acting is kind of like in the modern day to determine, how I'm going to make more money off my job, which is being an actor. And so it's an ordinary expense, because if you ask a bunch of other actors, they probably say the exact same thing. Yeah, I watch TVs, I watch TV, I watch movies, and I spend money on them so that I can keep up to date with the practice and all these things. So that's just a very unique example of the ordinary aspect of the expense thing. But obviously you can apply this to any other business. If you're a crypto business, the marketing aspect of it, a lot of other crypto companies right now are doing very strong marketing campaigns and buying things like, race car sponsorships, or even buying the rights to naming a stadium, right? And all these things are deductible as long as they're ordinary in the case of, your industry overall. But in general, I would say, if you do intend on expensing something and it is a gray area, please reach out, right, to the CPA, or even just email directly to me if you end up on a doola subscription. All of this is, something that a CPA can easily answer for you, and I would be easily able to say, yes, this is deductible. No, this is not deductible. There are obviously a lot of other expenses like the home office expense and et cetera, depreciation in general. They're very, very difficult to kind of talk about just over one call, and they're unique to every company. But I would say those are the two main things to determine if something is expensible. Is it ordinary in your line of business? Is it necessary for your business? And those are really the two rules, I'd say. Um, I know that we have been plugging a link. JP, if you could post it one more time. We've been posting a link for a free consultation after this call. If anyone is interested in speaking to myself or other tax experts about how doola can help your business, help create your business. We offer doola banking as well now. And we offer, obviously, since you're all on this call, we offer tax advisory, tax preparation, tax planning. Signing on to a bundle here at doola means, you get me throughout the year as a resource for any of your questions, regardless of how complicated or simple they are. But sometimes if they're too complicated, maybe it'll take me some time to get back to it, right? So let's see, JP, do we have anything else that you'd like me to plug? Or should we just keep staying in here answering questions for a few minutes? I think that we could actually probably do that if that's fine with you, JP. Yeah. So for everyone in here, we're just going to keep, I have free time a little bit after this. Partial, I don't know about you, but I'm just going to keep going through. If people are going to keep posting questions in the chat, if I can answer them easily on here, I will. And I can see that Partial was already doing it. So we'll sit around in here just in the next couple of minutes. Claudia, if you do want to have a video conversation, feel free to book off the consultation link, and we can certainly hop on to a call and kind of go over questions, just because for the most part, we don't want to have like a full in-depth conversation while everyone's still watching, right? Per diem expenses on business trips, as long as it's on an industry standard, right, and is something that is relatively fair, I would say it's deductible. For example, my time at Price Waterhouse Cooper, when I was an auditor, when we traveled, it depended on the city, right? When I was in the middle of nowhere in Iowa, it was $50 a day I got for food. But when I was visiting Chicago or visiting Miami, it was $75, at times even like $100 for per diem. And it was like absolutely within reason for food, for travel, for all of that stuff. So it's a deductible expense, for sure, like paying for travel. But if it's per diem for employees, it just needs to be reasonable, it needs to be within reason. You can't give someone a per diem of like $1,000 a day and they're visiting, Cincinnati, Ohio. That's not, that wouldn't be reasonable. For the per diem, Alejandro, you have to spend it generally, is what I would say. It actually has to be spent. So, I mean, maybe I hope nobody from PwC is tuning in, but like when I was working at PwC and I got the $75 a day per diem, I made sure to spend every single dollar of it, because otherwise, you're not taking advantage of the full deduction, and you just have to spend it all on food as necessary or on travel as necessary, and because they've already allocated it, right? But ultimately, you can't deduct it on a return or anything until it's spent, even if you've allocated the money out. Unfortunately, it's not like that kind of expense. David, when I say no return required, like for the LLC that truly has nothing, yeah, I would say what I'm saying is like, yeah, literally nothing. Like if you had no owner's contributions, no owner's distributions, you had no income, you had no losses, you didn't pay anything on behalf of the company, like if all this company is just sitting there as a legal entity, when I say no return required, I mean like no return required, like nothing to be filed except for your annual report every year with the state. But your federal tax filings are, out of the question. You don't really need to do it. In those cases, we do collect documentation to confirm that absolutely nothing has happened, and it's all in writing and documented in a perfect way, so that if the IRS ever asks in the future, why didn't you file this year? We would say like, well, these are all the answers, and there's no proof of banks, there's no bank statements or anything like that. So we still gather documentation for no returns required. But yeah, when we say no return required, we do mean that. Don't I need to provide evidence of a residence for the creation of an LLC and the according bank account? I think that's a question for you, Partial. That's a fun partial question. I'm sure you get that as a question a lot in sales
Sorry.
calls.
Sorry, I was busy attending some chats. Which question is this?
Alexander's, do I need to provide evidence of a resident for the creation of an LLC and the according bank account?
Yeah, so Alexander, you definitely need to provide a proof of residency. This is especially required at the time of opening of a US bank account. This is required at two stages. One, while registering the company, you have to mention you have to provide details of where you are currently a resident of, but that is just information. When you're actually applying for a US bank account, an online bank account, that's when you have to provide proof of that address as well. So let's say if you're in Thailand, for example, you have to provide some proof of your Thailand residency, so that the US bank knows that, okay, this person is in Thailand, they will do your KYC, or they will have a KYC record. They will check your passport. You also need a passport to open a bank account, and then that's when they will open a bank account. So they definitely do need proof of your residency before opening of a bank account, and at the time of creation of the LLC, also the state records this information. Yeah, so yeah, that's about it.
Let's see, Gaston. Let's see, I'm making my way up to Gaston's. How detailed documentation needs to be provided at the level showing all bank bills and transactions. So in terms of detail provided, the IRS expects receipts and invoices for basically anything over, well, receipts for anything over $75, and invoices for essentially everything. If you're collecting income, they expect that documentation. For a CPA to sign off on it and to file your return, all I ask for is the bank statements for 2022, the whole year bank statements by month. I ask for financial statements if you have them, getting an income statement, balance sheet, etc. And I also will ask for EIN letter if you're not currently a doola customer. I usually ask for someone's EIN letter to confirm. In terms of how detailed I'd get after that, it depends on every single business. Like if I see a business that has $100,000 in meal and entertainment expense, but like everything else is like less than $10,000, I'm gonna ask for receipts for the meals and entertainment expense because that it just doesn't seem reasonable. But for the most part, I would say almost all of our clients, I rely on bank statements and then just further follow up and further questions to management. And a huge part of a CPA's kind of training is, we're able to kind of, how much can we trust management to do their job? If someone's asking me throughout the year a bunch of questions about how to avoid paying taxes, I'm going to ask a little bit more, right, when it comes to tax season, because management has shown that they're only interested in dodging taxes. So that's just something also to consider, like being a good owner of a company and trying your best to stay up to date with regulations, or talking to your CPA in a way that's in a responsible way to plan for things. That allows us to do a lot less work and a lot less drill down because we can rely more on management. So that's just what I'll say. For Gaston, for your question, actually, for that, do you mind again just booking off that consultation link? Because I think yours will be very specific, and I'll probably need to ask more questions to see, well, did you need to file the 1040 NRs or not actually in the past 4 years? And because I don't want to just like kind of wing an answer on this regarding that question, since it's very specific. So just book off that link or reach out to me or the CS team directly. If I have an LLC, and yes. Let's see, any other questions that we've missed, Parshma or JP? Oh, there's 2 here at the bottom. If I have an LLC in US, can I provide services in Europe, UK? Yeah, absolutely. If you have an LLC in the United States, yeah, you could. Multiple of our clients have an LLC in the United States, or they take advantage of the legal structures that we offer here in the United States. And then all of their customers are in some different country. All of their operations are in a different country. And the US company essentially just acts as this, legal entity that allows the business to conduct. So yes, Claudia, that's no issue at all. Executive Order 14071, Michael. I know that this is very specific, but I know that I'm going to answer it because it's very important to, a lot of our clients and obviously around the world. This has impacted all people of that are CPAs that have clients from Russia. So for Michael, for Order 14071, yeah, in general, CPA services, incorporation services, things like that. We can't really do that anymore. And JP, correct me if I'm wrong, but we can't do that anymore technically for businesses that are Russian based or Russian owned, right? And that's just because of the Executive Order 14071. We can't work with it at all. What I will say, and what I can say is, I speak in general for the accounting field, not necessarily doola. CPAs have had their own guidance issued by our governing bodies in response to 14071. And if it is a company that does have a Russian parent or a Russian owner, if that company predominantly keeps all of its money here in the United States and predominantly does things in the United States and has management in the United States and isn't really just a pass-through for the Russian owner, we can still do those returns. But if it's a pass-through to a Russian owner or a pass-through to a Russian parent or anything like this, it is, yeah, unfortunately for Russian citizens, we can't, do any of that business at all with them just due to the executive order. And Michael, I think for that executive order, it was specific to Russia. We're probably about to wrap up on time. So if Parshva, were you going to say
Yeah.
something?
So yeah, sorry to cut you in. Just one another update on the Russian LLC register in Russia having a Russian address. This is something that we've actually spoken to I've personally spoken to the Delaware Division of Corporations, and they've mentioned. I'm just reading out the reply for everybody on call here. That please provide citations to the statute, regulation, policy, guidance, or presidential executive order which supports your position that the determination made by the Division of Delaware Corporations was in error by restricting your entity. All documentation should be come with a notarized affidavit stating that the documents are true and correct copies. So it basically involves a lot of legal work where you'll have to probably contact a a lawyer or an attorney who can draft a legal reply to that executive order, which as to why your entity was blocked or blacklisted by the state, and then have that reply notarized and then file it with the state. If the state accepts that return, then you can provide that approval to the state, and they will unblock or unrestrict your entity, and you can do your compliance and start running your company. But apart from that, if you can't, if the state rejects, if you don't appoint a lawyer and get this draft, get a legal draft done, or if you don't have it notarized, or if you don't have it, if after submitting everything accurately, the state, the Delaware Division of Corporations rejects your appeal, then in that case also your entity will not be unblocked, will not be, it'll get be blacklisted. So it basically something that we cannot really assist with because it's a lot of legal work and we're not experts in legal, in legal frameworks ideally. So you'll have to probably get in touch with a lawyer or an attorney who can help you there. That's all. Back to you, Jim.
Yeah. So even as a CPA, we have limits, and then we can only do so much, and then that's definitely a legal issue at the end of the day, more than a taxation or entity issue. We're probably going to wrap it up. The last thing, and maybe this is relevant to a lot of people. Jim Johnson, I like the direct address. How many clients are you serving presently? Do you have enough time to handle new clients, or your colleagues handling new business? Yeah, we are always accepting new clients here at Doola. Me personally, I handle up to around 200 of our clients. We have partnered with other CPAs that I work personally with. They're all aligned with me in terms of what we sign off on and what our opinion is. So even if it's not me that you're working with, I am the lead of tax ops here at Doola, and any of the other CPAs that you end up working with or who file your return, they would express the same opinion as me, and they're going to provide just the same service as me. So yeah, we are always accepting new clients, and like I said, book that free consultation. Yeah. How long of a wait for response to questions on accounting? For me, it's one. Even if you have another CPA, I'm always going to be generally the person you reach out to for tax planning questions or tax advisory questions. In the middle of tax season, I'll be honest, like I'm having a delay of between 2 or 3 to 6 days because it's the middle of tax season. But I would say outside of tax season, you can almost always get your answers by email within a day to 3 days maximum. And that seems to be what a lot of our customers here at Doola find to be very, very valuable, having that available CPA to answer their very specific business questions. So cool. Yeah, everyone just book a free consultation to resolve any questions. They'll definitely be able to help you out, and we can absolutely just go ahead and wrap this up. Thank you guys for tuning in. I think this is a very good webinar. Hopefully we got most everyone's questions answered. And this recording will be available in the future if you want to look back on it. So yeah, I look forward to meeting all of you who said you're booking consultations, and looking forward to helping out with your businesses. Let's Doola it. Cool.